It's 3 o'clock p.m. Beijing time on July 13th. Do you remember what I said in the video yesterday? Profits are normal, losses are normal. After all, what we do is super short-term trading. There will be 1 to 2 loss out of 10. Is the winning rate high or low in your perception? After a 20-game winning streak, last week saw 2 consecutive losses, but yesterday's 2 orders were profitable. There's a lot of dry output in the video today. First, we'll review yesterday's operation and then talk about today's EURUSD and XAUUSD in what price into the market. Where to put a stop? In yesterday's video, the first entry point was EURUSD 1.1853 to 1.1832 buy orders, with stops set at 1.1870, lowest price at 1.1836. All EURUSD buy orders are traded. Gain $140 to $250 per lot at up to 1.1868. In addition, the gold buy orders in 1794 to 1791 had a stop loss set at 1787.7 and the lowest price at 1791.6. Most of the gold positions were in and a few were not. When it went up to 1798, friends who followed made $400 to $640 per lot. It has to be said that after closing the positions, gold rose to 1880, 260 points up. We accurately grasped the entry point and direction, with a small stop loss in exchange for our own reasonable profits. That's great. You need to know what is your own market and what is the market of others. From January this year to today, through a single hand trading, our asset management account yield is 69.6%. Accuracy is 79.3%. That's what keeps us standing. How can trading impetuous us? That we only throw money to the market for nothing. Individual investors do not trade well because they cannot find their own position, but also want to seize any market. That's what I want to say about today. In addition, the strategy in the video, the liquidation of positions cannot be done in real-time notice. You are vulnerable to losses here. The purpose of establishing the guidance exchange group in the second half of the year is to target at the investors or institutions who really want to do a good trading but are cooperating with us for the first time. If you want to consult and cooperate in the guidance group, then can add the contact information on the top of the screen to find me. So what are we going to catch today? After the 2 single profit yesterday, today's EURUSD and gold prices are in the middle of the shark. The admission point is not very close to the long or short, so it is recommended to do sell limit orders in advance today. Before Fed Chairman Colin Powell's hearing, the market lacked guidance on fundamentals and was dominated by technical moves. On the 1-hour K chart, both the euro and gold are trading in a target range. Under the premise of large cycle short trend, this position is more stable to short on high. Euro is recommended short at 1.1885 to 1.1897 with stops at 1.1923. Gold is also recommended to sell 1816 to 1818 in churches with stops at 1821.7. Those are sell orders. The target price will not be put in the video because the target price and stop loss point can be set in advance, and the target stop profit point in the video cannot be updated in time. If you need real-time precise point strategy, take profit, stop loss, changing direction, and big risk notice. Lauda will be notified in WhatsApp and WeChat group. The above is for today's ultra short-term strategy, and if do long-term micro-market change is very slow. But because today's ultra short-term entry point has not arrived, we can talk about the trend of the dollar and euro. Again, the rise in nominal interest rates was a key factor that dominated the market in the second half of the year, and before the Fed officially released its exit pace. Nominal interest rates were being driven down by the influx of money, firstly by the market pricing in the demand shark. The other is the direction change of carry trade. At present, the US bond yield after currency hedging has a relatively spread advantage. For example, the 10-year US Treasury yield after euro exchange rate hedging is 0.58%, while the German 10-year yield is minus 0.26%. The arbitrage trade will be integrated into euro and buy USD. Judging from the market performance, the euro will depreciate continuously in the second half of the year, while the dollar will rise in appreciation.